Good morning, Jags. This is Fahad. Today is Monday, November 16th. The chart that's in front of you is Nasdaq. It's down 35 points or 0.3%. And if you look at in the pre-market session, since that Moderna news came out right around 6:50 a.m. Eastern time, Nasdaq was nicely up almost 70, 80 points at that point, but then it gave up all of those gains and now it's red. And then you move over and then take a look at the Russell 2000 futures. Russell 2000 index futures are up 36 points or 2.1% and breaking out from bull flag. And once again, if you look at the intraday price action, as soon as that Moderna news came out, the Russell 2000 index broke out yet once again, and it's going to have a pretty strong day. Now, this is pretty much exactly the repeat of what happened a week ago, except the rally a week ago on Monday last week on Pfizer news, vaccine news, was much, much stronger in Russell 2000 and much, much weaker for NASDAQ. Similar kind of a price action, but to a lesser extent, which is basically telling you that the market has adjusted the expectations for a potential vaccine coming out in both the Russell 2000 as well as the NASDAQ. So I think that this is telling you that while the NASDAQ will likely be weak, but I think that it's not going to absolutely crater. It's going to be just fine. And Russell 2000 index has potentially started to bake in a lot of it optimism already, at least in the short term. And also keep in mind that the vaccine is not going to be coming out at least until January, February is the date that I'm looking at, which is the earliest that's available, potentially not until spring of 2021. So we're still talking a lot of time, 3, 4, 5 months or 6 months potentially, because before it is widely available everywhere. In the meantime, we have coronavirus raging across the country. On Saturday, we had 182,000 cases, new cases of coronavirus, COVID-19 in the US, and we had about 2 consecutive days of more than 1,400 deaths, and the hospitalizations are now also at record high in the US. So situation is quite bad, but there is optimism in the market because of these vaccines that are coming out. Now, with that said, I want to touch upon a couple things real quick, and then I'll pass on the torch. So most important thing is that Palo Alto Network. We provided the bullish preview, earnings preview on Friday in Conversations, and this stock is going to gap higher sharply. So here is the Conversations video. You can take a look at it, in which we provided the earnings preview. Stock had a very nice rally on Friday, closed at 258, and in pre-market it is trading now at 269. Exactly where I thought it would go, which was my $270 price target. For those who do not know, in the chat room, a client asked a question after the video was posted as to how should we trade the earnings. And I mentioned that, typical my rule of thumb is that I take 70% of the straddle price, and the straddle was pricing about $13 move or $18.50 move. So I took 70% of that, which was $13 move at 13 to 257. You get to $270 price target. So the recommendation was to buy January, November 270 call calendar spread for $6.10. All right, and the stock is trading at 269 and 37, exactly right where we want it to go. What does this mean? That calendar spread, the January-November calendar spread, is going to open potentially with a 50% to 100% gain this morning. If you end up buying it after a discussion in the chat room on Friday, take profits and step aside. So that's on PANW. Now, with that said, 2 stocks that are on my watch list. One is WestRock Companies. This is a specialty chemical / containerboard company, and I'm expecting this a stock with the Buy America, Build America theme, and this rally that is taking place in Russell 2000 index. I expect this a stock to perform nicely and strongly today, with the potential for a breakout through $42 resistance. All right, if you draw the line, you will see that there's a lot of VOP resistance at WRK right here at $42 level. Major VOP. I expect this stock to clear that today, or rather pretty soon. Another way of looking at it is simply this chart. If you look closely, this chart has a very decent rising uptrend, And right now, as it starts to take the next leg higher, it opens the door all the way to $45 per share. So on a percentage wise, I'm expecting about a 10% move higher in WRK. Now, the reason why I like this name is because there is an interesting article out. Recall last week in webinar, as well as in chat room, I discussed that there was a large $50 container board price hike that was announced in late September by the industry, and I used that benchmark to basically provide a bunch of fresh new trade ideas, both in webinar as well as in chat room and the official trade alert. Clients are already positioned into that one and everything, so I'm not going to go into the detail as to what that trade idea was. But this morning, KeyBank has a bullish note out in which they're talking about that there's going to be another $50 per ton North America price increase coming potentially in the first quarter. And that's going to be very bullish for the North American containerboard machine. All right. According to Fast Markets RISI PPI Pulp and Paper Week, published 2 weeks ago on the North American global containerboard markets over the weekend, that highlighted the contrast between how good the market conditions are and how difficult they could become in the next couple of years, with the former potentially contributing to the latter. Most important thing is that in this note, they talked about that the North American market continues to be so tight, the capacity so tight, that a lot of these container board sellers, they're having to actually import the goods from the Asian market in order to fill the demand, which is seeing a significant rise across the board. And as a result, because of that deficit, these North American container board makers are having to constantly return back to the market every couple of weeks or couple months and raising the prices. The last $50 per ton price happened in September, late September, which will benefit, or it did benefit, the fourth quarter earnings report. And we saw that when the earnings came out from WestRock on November 4th. Another $50 price hike will be coming sometime in Q1. Market has not modeled that into the estimates yet. With Russell 2000 rising, I expect WRK to break out through 42, and the target, short-term target, is $45 to $46 per share. Now, and the last thing I will quickly discuss is one of our Jaguar top pick, which is CRNC, symbol CRNC. Many Jag clients are already positioned in this trade for quite some time. As a reminder, CRNC was a, I thought I had the, here. CRNC is a Jaguar top pick from the third quarter outlook, in which we recommended just buying the stock for $41.70. This is a former spin-off from Nuan Communication. This idea was sent in July, and you can see 41 was right here, and now the stock trades at 65. This thing is going to gap higher again sharply, now trading at up another 5% in pre-market. Is going to break out through all of this, and is trading above $70 per share. So here's another technical look on the chart, and if you look closely, this was trying to break out, and I mentioned this in the chat room, and I showed this chart, and I said this thing is going to clear 66 and is going to make a run. Well, it's trading at 77 or $70 per share in pre-market after a very, very strong quarter. So for those who are positioned, fantastic. Here's the earnings report that came out this morning. This is an absolutely blowout quarter. Really, really impressive quarter. The company posted earnings per share of 61 cents versus 34 cents estimate. Revenues of 90.9 million versus 79.6 million estimate. The full year guidance, EBITDA guidance, was raised about by a midpoint of about 5 to 6% above consensus. And the revenue midpoint guidance was raised to 370 million versus 358 million estimate. So a very strong quarter posted this morning by the company. I was also looking at the management commentary, which is all over here. And in this commentary, the management talked about that there is a particular acquisition that they did right over here, in which they're very excited. They talked about this acquisition, which is called Swerve. This acquisition was completed last week. Management believed that this thing is going to provide massive free form of marketplace, basically a brand new opportunity for the company to continue to expand into whole earth brands production and continue to focus on the new territories that the company has not had previously. So Not going to go into the detail, just know a very strong quarter, positive commentary from the company, and the stock is getting higher by 5%. We like this name a lot, and it's a play on the auto cycle and the entire automation business. That's it from me. Chronicle.
Morning, Fahad. Hope everyone had a great weekend. Don't have any new setups or ideas for the immediate term, but going into next year, I think energy is a sector that's worth getting long. And this morning, I have a bullish note from RBC regarding one of our favorite energy stocks, Pioneer Natural, symbol PXD, which is a company that would fall under one of the more safer defensive categories in the energy sector. And this note is mostly regarding their recently announced acquisition of Parsley Energy. So going forward, the biggest benefit for shareholders from this merger is the prospect of dividend growth. Like RBC here is estimating that even if WTI stays between 45 to 50 per barrel, which is pretty conservative, they still expect to see roughly 9% free cash flow growth through 2025, which would be well above industry average. And digging deeper, when the company reveals its formal budget early next year, RBC is expecting a reinvestment ratio of between 65 to 75%, which leaves 10 to 20% of total shareholder returns. Fahad, as you've always said from time to time, Pioneer has one of the lowest break-evens among shale producers, and that's mainly driven by its acquisition costs in the Permian Basin being ridiculously low. Like we're talking roughly just $500 per acre. And so remarkably, their low cash costs plus dividends can be fully covered even if oil were to drop to $35 per barrel. On a related note, Pioneer has an industry-leading balance sheet, and even if we take into account this acquisition of Parsley, the leverage only increases slightly to 0.9 times in 2021, which is still well below the 1.6 times average of its peers. Now put together, this note is estimating that the dividend yield could eventually quadruple to about 8% by 2025, under the scenario that WTI remains between $40 to $45. But if WTI goes higher, which is very likely because hopefully this pandemic won't last for 5 years, then we can expect the total dividend to reach 8% even sooner. And this is not conjecture, because if we look at the conference call transcript, management is planning to enact a variable dividend mechanism next year with targeted payouts beginning in 2022. So this is not hypothetical. Lastly, in terms of where the stock can go, RBC is setting a price target of $130 by next year, which is about 40% upside from current levels, give or take. So not quite the kind of triple-digit returns you would expect from owning, the higher beta and beaten down small cap E&Ps, which are which have a much higher risk. But with PXD, you're at least getting a lot of safety.
Yeah, this is a fascinating chart, and let me just iterate what Chronicle just said. This is a very important chart right over here, so it needs a little bit of explanation as well. So in a scenario in which we basically believe the crude oil remains $45 to $50 per barrel, given how attractive the cost structure is of the company, Pioneer Natural Resources, that is, in out years, we're expecting the free cash flow yield for the stock to rise as high as potentially a 9 to 10%. I can tell you this, that with a 9% free cash flow yield, this becomes a very, very attractive equity that's out there. And then similarly, so easily for this company to cover the dividends. Now, this is based on a scenario that the crude oil stays between $45 to $50 per barrel. But when I see first read and I see news like this, this is today's first read, China's industrial production grew by 6.9% year over year versus 6.5% expected in October, driven by a 94.1% surge in new energy vehicles manufacturing, 28% production microcomputers, and you can just go down the list. I keep saying this nonstop. People have been significantly underappreciating the potential for recovery that is taking place in the basic building blocks of economy. And we have talked about, manufacturing, machinery, the transportation, the infrastructure, the construction, and naturally ties into all of this is the oil sector. Energy is at the center of all of this. Even the banking sector is at the center of all of this. This is where the entire growth to value rotation comes in. Crude oil is higher by 4.1% today, boosted by this news from China with strong industrial production, as well as the Moderna news that's coming out. I continue to believe that crude oil is not going to stay between 45, 50 or up to 50. I think there's a potential for this to rise all the way to $60 per barrel over the course of next 12 to 18 months. The simple reason being the rig counts have been cut by 70%. The strategic petroleum reserve inventories are down drastically. The production has been cut across the board. And if you look at the current state of the world economy, the world is consuming 96 million barrels of oil, but producing only 91 million barrels of oil. So if the crude oil appreciates, you've got names like Pioneer Natural Resources, EOG Resources, many others. They will play catch up considering how depressed these stocks are. So I 100% agree. I think that there is a fantastic setup for these energy sector to continue to bounce back from here. Good stuff, Chronicle. Jay will join us tomorrow. He's taking a break from this today. And so that's it from us for today. And we'll see you in the chat room shortly.